All right, so we're back for another deep dive, and today,
Yeah,
we're going to be talking about altcoins and stablecoins.
two big ones.
Yeah, and I think, a lot of our listeners are probably already pretty familiar with,
Yeah,
the basics, but we're going to try to, really
get into it.
get into the weeds here.
Yeah.
So,
So altcoins, I guess we can start with.
yeah, let's start there.
Altcoins are anything that's not Bitcoin.
Right.
Basically every other cryptocurrency out there.
There's a lot of them.
Huge chunk of the market.
Yeah, and then we have stablecoins, which kind of, promise to be this, less volatile alternative.
The steady eddies.
Yeah. Are they really, though?
Yeah, we're going to look into that.
That's what we're going to talk about.
We're going to see if they live up to the hype.
And I think, we're going to touch on how people use stablecoins to make money.
Yes.
And even how they can maybe protect against inflation.
Very interesting stuff.
So there's a lot to cover.
A lot to dive into.
So let's start with those altcoins, I guess.
Yeah.
Why would someone want to choose
Yeah.
an altcoin over Bitcoin?
I mean, a lot of altcoins try to improve on certain aspects of Bitcoin.
Okay.
So, for example, have you heard of like Nano
I have heard of Nano.
or Stellar?
Yeah, I've heard of Stellar.
Those are two that are really focused on speed
Okay.
and low fees.
Oh, interesting.
So they have different consensus mechanisms they use
Okay.
to achieve that, which is where things get interesting.
Yeah.
Like Nano uses something called open representative voting.
Okay.
Stellar has the Stellar consensus protocol,
Catchy.
but they're both, much more efficient
Okay.
than Bitcoin's proof of work system.
So you're saying if someone's like priority is just
Uh-huh.
like how fast and cheap it is,
Yeah, if they want to send a transaction,
they might look to
they might look to one of those
one of those.
rather than Bitcoin.
Okay, that makes sense.
And then you have some that are expanding the functionality.
Okay.
So like Ethereum with its smart contracts
Right.
opened up like a whole world of possibilities.
Yeah. DeFi, I hear that term thrown around a lot,
Yeah.
but honestly, I still
Yeah.
not really.
I feel like a lot of people are in that boat.
I don't really get it.
Yeah. It can be confusing.
So break it down for me.
Decentralized finance, basically.
Okay.
It's like
yeah.
financial applications built on blockchain technology.
Okay.
So imagine like lending, borrowing,
Okay.
trading. It's all happening
Okay.
without like traditional banks or intermediaries.
All right. So cutting out the middleman.
Exactly.
Yeah.
And a lot of those DeFi applications are powered by
Okay.
altcoins
Yeah.
like Ethereum.
Interesting. So more control
Yeah, potentially.
over your own finances.
Yeah.
But I also hear a lot about how volatile altcoins can be.
Yeah.
Is that something to worry about?
It's definitely a factor.
Okay.
There's potential for big gains.
Right.
I mean, some early adopters have seen like,
Life-changing money.
crazy returns. But the flip side is they can be really susceptible to price swings,
Yeah. Even more so than Bitcoin, I feel like.
sometimes even more so.
Okay.
Yeah, and that's where the whole altcoin season thing comes in.
Okay. What is altcoin season? And
Yeah. Should I care?
you should care if you're investing in altcoins.
Okay.
So it's this period of time that usually follows
Right.
like a big rise in Bitcoin's price. And it's when altcoins tend to see accelerated growth.
Okay, so Bitcoin goes up and
Yeah.
then people
Yeah.
are looking for the next thing.
Yeah, the theory is like once Bitcoin establishes like a
Yeah.
price level, investors start looking for other opportunities
Oh, interesting.
with potentially higher returns. And that's when altcoins get their moment.
Gotcha. So high risk, high reward.
Yeah, basically. But remember, it's still a speculative market.
All right.
So nothing's guaranteed.
So altcoins potential for big wins,
Yeah.
but also
All buckle up.
it could be a bumpy ride now.
Okay, let's move on to stablecoins.
Yeah.
So they aim for stability,
The goal.
but it almost sounds too good to be true.
Yeah.
What's the catch?
Well, the trade-off is they might not offer
Right.
those same like
Yeah.
exhilarating highs and lows.
Yeah, you're probably not going to get rich off stablecoins.
Probably not overnight,
Right.
but they can provide like a sense of security,
Okay.
predictability, especially for traders
Okay.
who need a break from the volatility.
So if the crypto market's going crazy, I can just like move some holdings into a stablecoin and kind of wait it out.
Exactly. You don't have to convert back to like
Got it.
traditional currency.
Yeah.
Like take shelter during a storm.
I like that analogy.
And that could be really useful for people who are actively trading.
Yeah, that makes sense.
Yeah.
But I've heard there are different types of stablecoins.
Oh, yeah.
And some are like better than others.
Yeah.
Where do I even start with that?
Well, you're right.
Yeah.
They're not all created equal.
Right.
Some are directly backed by fiat currencies,
Yeah.
like the US dollar, while others use algorithms or even other cryptos
Okay.
to maintain their peg.
Yeah.
And this is where things can get a bit
Ooh, spicy.
controversial.
All right. I like where this is going. So
Uh-huh.
what should I be watching out for?
Well, the biggest question is trust.
Okay.
How can you be sure that a stable coin is truly backed by the assets
Right.
it claims to have?
Yeah. Okay. It's kind of like, are they actually holding the dollars or,
Exactly.
Yeah.
What's going on?
It's all about transparency, right?
Yeah.
And that's why there's been so much scrutiny around Tether,
Tether. Okay.
which is one of the most popular stablecoins out there.
Okay.
For years, they claimed
Okay.
that each Tether token was backed one-to-one by US dollars.
Okay. So
But there was a lot of skepticism.
1-for-1.
Yeah, exactly,
Right.
because they weren't very open about their reserves.
So if it was really that simple,
Right.
why not just show everyone?
Yeah, all the secrecy.
Yeah.
Right. And then in 2019, they quietly updated their website.
Yeah. Suggesting that the reserves might include things
Okay.
other than just US dollars like loans,
Oh,
commercial
yes.
paper, things like that.
So not just holding $1 for every.
Yeah. It wasn't as simple as it seemed.
Okay, that's a little.
Definitely raised some red flags.
Yeah, a little sus.
And then the New York Attorney General's office got involved.
Oh, boy.
Yeah, they did an investigation.
Okay.
And Tether ended up paying an $18.5 million fine in 2021.
That's a lot of money.
It's not nothing.
So did they finally have to come clean?
I mean, they did release some information as part of the settlement,
Okay.
but it still wasn't like a
Yeah.
full independent audit.
So still some questions
Yeah, even today,
about their reserves.
there's still questions about whether they truly have enough assets
Okay.
to back all the Tether that's out there.
So sounds like Tether maybe approach with caution.
Yeah.
What about other stablecoins? Are they all kind of shady like that?
Not necessarily.
Oh.
There are some that are considered to be more transparent.
Okay, like
USD coin or USDC.
USDC. I've heard of that one.
Yeah, that one's issued by Circle,
Okay.
which is a consortium that includes like Coinbase,
Okay.
some big players.
So a little more trustworthy.
Yeah, they're generally seen as more trustworthy than Tether,
Okay.
partly because they release these monthly attestations
Okay.
about their reserve
Okay.
that are reviewed by a reputable accounting firm.
Okay, so there's like someone checking their work.
Exactly.
Regular checkups.
So it's not just...
But are they just holding US dollars or is it still a little more complicated?
Even with USDC, it's not just a pile of cash.
Oh,
Their reserves do include US dollars,
okay.
but also cash equivalents and other short-term investments.
All right. Still got to
Yeah.
read the fine print.
Yeah, it's always important to
Uh-uh.
understand how those reserves are structured.
So it sounds like really you need to do your research, definitely, no matter what stablecoin you're looking at.
Yeah, do your due diligence
Okay.
before you invest.
Are there other types of stablecoins?
Oh, yeah. We've been talking about
Okay.
fiat-backed stablecoins.
Okay.
There's also algorithmic stablecoins.
Algorithmic stablecoins. Okay, what's that?
Yeah, they work in a completely different way.
Okay.
So instead of relying on reserves
Okay.
of a specific asset,
Okay.
they use algorithms and smart contracts
Okay.
to adjust their supply
Okay.
based on market demand.
So it's like a self-correcting
Yeah, like a self-correcting.
system. Okay.
So if the price starts to stray from its peg,
Right.
the algorithm kicks in to bring it back.
Okay. Interesting.
A well-known example is DAI,
DAI. Okay.
created by MakerDAO,
Maker DAO.
and it maintains its peg to the US dollar
Okay.
through a system of collateralized debt positions,
Flavor.
or CDPs, and these algorithms.
Debt positions. Okay.
Yeah.
Break that down for me.
Okay, so think of it like this.
Okay.
If you want to borrow $100 worth of DAI, you might need to lock up like $150 worth of Ethereum
Okay.
as collateral.
So you're putting up something
little
of
good
value
notes,
to get the stable coin.
And then the algorithm generates the DAI
Okay.
that you've borrowed against your ETH.
Okay.
And then if the price of ETH drops,
Okay.
the algorithm may automatically sell
Whoa. Okay.
some of your collateral
To make sure.
to make sure there's enough value backing the DAI.
So even though it's algorithmic,
Right.
there's still
There's still real world value.
real world stuff backing it.
Yeah, it's designed to maintain stability even if
Yeah.
that underlying collateral fluctuates.
That's pretty smart.
Yeah, it's a pretty clever system.
But it also sounds a little like
It can be complex.
Complicated.
Yeah, and that's one of the drawbacks.
Okay.
These systems can be vulnerable to exploits.
So if someone finds a flaw
Yeah, if there's a flaw in the code,
in the code.
or if the market just like
Right.
behaves in an unexpected way, things can go wrong.
Okay, so not foolproof.
Not foolproof.
And there's also like the centralization aspect of it, right?
Yeah, that's another point.
Like someone has to
develop and maintain these algorithms.
Right, so it's not truly
This raises questions about like
decentralized.
governance and control.
Right.
Yeah.
Interesting.
So it's not a perfect solution, but
It's an option.
it's an interesting one.
And are there even more types of stablecoins?
You know there are.
Okay.
There are even stablecoins backed by other cryptocurrencies.
Wait, so a stablecoin backed by something that's
Uh-huh.
known for being volatile?
Yeah, it sounds a bit paradoxical.
How does that even work?
It's all about over-collateralization.
Over-collateralization.
That's how they manage the volatility.
Okay, so what does that mean?
So let's say you want to borrow like $100 worth of a stablecoin that's backed by Ethereum.
Okay.
You might have to lock up like $200 worth of ETH as collateral.
So even if ETH drops,
Exactly. There's still enough
It's a-
to back the stablecoin.
buffer.
Yeah, like a safety net.
Okay, so that's interesting.
Yeah.
But besides just offering stability,
Right.
what are some of the other benefits
Yeah.
of stablecoins that people are excited about?
Well, one area where stablecoins really shine
Okay.
is in the realm of savings and interest.
Oh, okay.
You know how traditional savings accounts these days
Yeah, they're terrible.
offer practically nothing?
Yeah.
Well, with stablecoins,
Okay.
you can potentially earn much higher interest rates,
Really? How much higher are we talking?
sometimes even 10 times higher
10 times higher than my bank.
than what you'd get from a traditional bank.
Okay, what's the catch?
It's all thanks to DeFi.
DeFi again? Okay.
Yeah, decentralized finance. Remember those lending and borrowing platforms?
Right. Right.
You can deposit your stablecoins into these protocols
Okay.
and earn interest as others borrow them.
So instead of letting my money just sit there,
Exactly.
I can kind of put it to work.
Put it to work and earn a decent return.
Okay, and why are the rates so much higher?
Well, partly because DeFi cuts out the middleman.
Okay.
Fewer fees and expenses to eat into your returns.
So more efficient
Yeah,
and the benefits go to the users.
exactly.
Okay, but is there any risk? Like,
Yeah.
are these high rates really sustainable?
That's a good question, and you're right to be cautious.
Okay.
As more people invest in DeFi, the competition for stablecoins
Right.
will likely increase, which could lead to lower interest rates.
So it's like the early bird
Yeah, it's like anything new.
gets the worm.
Early adopters
Okay.
often get the best deals.
So besides interest, stablecoins also offer a way to hedge
Yeah.
against inflation.
Yes, both traditional inflation
Okay.
and volatility within the crypto market itself.
Wait, how do they do both?
Okay.
Okay, so let's say you're holding Ethereum
Right.
and the price is fluctuating.
Yeah.
You could convert some of your ETH into a stablecoin
Okay.
when you think the price is at a peak.
Okay, so lock in.
Yeah, lock in your profit, some gains.
Protect yourself from a potential downturn.
So kind of like taking a break
Yeah.
from the volatility.
Take a break, but you're still in the game.
Okay, and then how does that protect against like regular inflation?
Well, if you're living in a country
Okay,
with a currency that's losing value
right.
due to high inflation,
Yeah,
holding stable coins pegged to a more stable currency
okay.
can help preserve your purchasing power.
So like a stable alternative.
Yeah, exactly.
Okay.
Especially for people in countries with hyperinflation or
Yeah.
limited access to financial systems.
Which reminds me, I've
Yeah.
heard people talk about stable coins
Yeah,
and like financial inclusion.
absolutely.
What's that all about?
Well, stablecoins have the potential
Okay,
to really change how
Gotcha.
people
okay,
access and manage their finances,
okay,
particularly in underserved regions.
okay. Yeah,
Think about remittances,
remittances.
sending money across borders.
Okay.
Using traditional methods can be
Yeah, it's a pain.
slow, expensive,
Yeah,
lots of fees.
yeah.
Stablecoins offer a faster, cheaper,
Okay.
more efficient way to send funds,
So it's like a global instant payment
exactly.
system.
powered by blockchain technology.
All right, I like it.
And because they can facilitate microtransactions,
Okay.
it opens up opportunities for like content creators,
Well, interesting.
freelancers, anyone working in the gig economy.
Yeah, that makes sense.
They can receive payments for their services quickly and without
Uh,
incurring those high fees.
So it's like a game changer,
It could be.
not just for investors.
Yeah, for people all over the world.
Really regular people.
Yeah, who are currently excluded
Yeah.
from traditional financial system.
That's really cool.
Yeah, there's definitely challenges and
Right.
regulatory hurdles, but the potential is there.
So much potential in this space.
Yeah. It's exciting.
Well, I've got to say, this deep dive has been really eye-opening.
Glad to hear it.
From altcoins to stablecoins, it seems like.
It's a lot.
The world of digital assets is...
It's constantly evolving.
just changing all the time.
Yeah.
So much to learn.
Definitely. And this is just the beginning.
That's right.
There's so much more to explore.
Always more to learn.
Definitely.
Well, thanks for joining us.
Yeah.
On this deep dive into altcoins and stablecoins.
My pleasure.
And until next time,
Yeah.
keep exploring.